Before the market closes, you see this signal. And then you wonder if you should trade this, this, or that. Between buying and selling your overnight swing trade, I would definitely say the skill of selling will have the greatest impact. However, your skill, the decisions you make when you buy your options, also offer you an advantage. There are a number of considerations when buying your options, and when to buy them is probably at the very bottom of the list of things to consider. Generally, we buy our options at the very end of the trading day, the last seconds. However, sometimes we want to wait till after the market closes. The reason for this is that maybe the market was trending straight up or down. There was a lot of momentum. And when that happens at the close of the trading day, quite often the market settles after the market closes, which means you could possibly get your options at a little bit cheaper price. However, if you're not careful, you might end up paying more. That's because there could be business news after the market closes, such as earnings. Perhaps Apple or Amazon or Google announces earnings right after the close. Well, that announcement could move the market in a big way. So you may want to wait until those announcements happen and then make a decision as to how you want to play it. So you don't always have to buy right at the market close. Sometimes it's wise to wait. It's also important to keep an eye on what might happen the next morning, such as additional earnings reports before the bell, or possibly economic data released around 8:30 Eastern Standard Time, such as the CPI or jobs reports. Often these reports can move the market greatly, either up or down, which means you need to consider, is your indicator taking that into account? When buying options based on an indicator, I generally take two approaches. And the first one is to always follow the indicator, even if I think it might be wrong. And the reason for that is you really shouldn't second guess your indicator. It's a bad habit to get into. If you're second guessing your indicator all the time, then there's really no good reason to have an indicator. However, if I know that there's economic news coming or earnings reports that could affect the options that I'm buying, I will consider the position size that I'm making. So if I'm not confident in my indicator, I'll make a much smaller position size compared to the times when I have full confidence. I like to get to know my indicators well. I want to know the level of confidence that each indicator has. Now, up or down signals are great, and it makes it really easy to trade. However, knowing that the signal has a lot of confidence or is rather neutral, it may be pointing up, but it wouldn't take much to flip it the other direction. That's important information to have, which means that I can position size once again based on the level of confidence of that indicator. And there are times when my indicators are rather neutral, and I know there's big economic or earnings reports on the horizon overnight, which means the market could go either direction, and my indicator's saying exactly that. So that leads me to my second option, and that is to not trade at all. No, you don't have to trade every time. And developing that skill as to knowing when it just might be the right time not to trade can actually save you a lot of money and heartache over time, preserving capital, which means over the long term, you're going to make a lot more money. So you should have go-to trades based on different market conditions. Perhaps your average trade is a SPY TA trade or possibly a SPY TB trade when there's a more volatile market. However, when you don't have a lot of confidence, you may want to go to a SPY TAQ trade, which is really not a lot of money. It's a little riskier, but you're not going to put as much on the line and will help you gain if you're right and not lose as much if you're wrong. Despite the fact I reserve the right to not trade, I generally recommend you trade every single day. And that's because it's kind of like going against your indicator. Picking the days in which you trade can actually work against you. You can miss out on big opportunities. That actually happened to me last week. The week wasn't going very well, and we got to Thursday night, and it was kind of a neutral indicator. So I decided, you know what? I'm not going to trade. Well, the indicator was correct, and we had a huge update. In other words, I missed out on great potential that could have impacted my portfolio for the month. So in most cases, rather than not trading, I recommend you consider position sizes based on the strength of your indicator and your knowledge of how the market might move the next day. If you don't have a lot of confidence, follow your indicator with a very small position size. If you have a lot of confidence, then put a little bit more in, but never put it all in and never go beyond your risk tolerance. Because you know what? Even if you have all the confidence in the world, you think you know what's going to happen the next day and all the indicators point the same direction, the market could still change its mood overnight. So have a plan as to how you're going to trade the market in different situations. Always reserve the right to lower your position size or even not trade when you think it's just not right. But you should be consistent most of the time. Have a standard setup. Have standard rules for yourself and follow through with those rules. Don't make audibles or change your plan at the last minute. Stick with the plan. If it doesn't go right, then reevaluate your rules for the next time. And of course, have a plan for the most important skill, selling. How are you going to sell the positions you just purchased the next morning? What are you going to do if the market goes in your favor? What are you going to do if the market reverses overnight? The goal of this process is to be more right than we are wrong, and our buying and selling skills can play a big role in that by minimizing our losses and maximizing our gains. Of course, if our indicators are doing well, all the more easy. But it's not always easy. There are times when the market is shifting every night and it just doesn't seem like things are going your way. However, you can minimize that effect by learning how to buy, how to plan, and how to exit each one of your positions. And I'll see you in the next video.